Welcome back to the channel, or welcome to the channel if it's your first time here. My name's Troy, and since September's now over, it's time to get an update on our progress towards an early retirement. With September being the last month of Q3, we have a ton to go over in today's video, including a new all-time high in portfolio value, a large dividend raise from one of my highest conviction holdings, an exciting update to my dividend snowball, and so much more. Before we dive into all the details, let me know down in the comments how you guys did in September. Did you guys reach any new all-time highs, get any crazy dividend raises, or set a new record for dividend income? Let me know down in the comments so we can chat about it. With that being said, let's jump into the first chart that I like to call the cash deployed tracker and see just how much we were able to throw into the market for September. September was a little unique with the cash deposited because of a conversion from two old company traditional 401ks into my Roth IRA. If you find September 4th on the top chart, you'll see that it's the only negative day, and it's quite different than all the other days, despite investing my usual $76.82 across both my taxable and Roth account. This is simply because I had to sell out of all those traditional holdings so I could pay Uncle Sam now, in pursuit of not ever needing to pay him again out of this money, one of the main perks of a Roth IRA. With that being said, we were still able to invest a net total of $3,468.11 across 21 trading days for the month of September. That brings the year-to-date total invested to $30,939.29, moving my monthly average to $3,437.70. At this pace, I'm on track for about $41,252.39 invested for the year, which would be my best yet. In an effort to see just how many days in 2025 I can invest, my investing streak is now at 185 of 186 market days, with February 5th still standing as the only missed day of the year. Thanks to another perfect month in September, the investing streak is now up to 163 days in a row. From here, let's roll into the total portfolio value and see where all this consistency has taken us. At the start of this year, our portfolio was valued at $341,885.84. We closed out August at $386,582.54. And for September, I'm happy to report we checked off yet another milestone with a new all-time high of $406,014.60. For anyone that doesn't want to do the math, that's an increase of $64,128.76 so far in 2025, and an increase of $19,432.06 over just the past 30 days. This marks 5 green months in a row, powered by steady contributions, dividend reinvestments, and a market that punishes those who wait to get started. With the value side taking care of business, let's turn to the activity side and go through the buys and retirement account conversion completed in September. Here's a look at all of our activity for September. I'll give you a second to check out the chart on the screen. It shows all of our individual stock and ETF activity across all accounts this month. Now in total, despite selling my traditional 401k account, we still managed to add 69.2882 shares this month. In total, we deployed that $3,468.11 this month and added another $78.44 in projected annual dividend income, even after losing income from DGRO, QQQM, and VOO because of those sales. On a month-over-month basis, my investing style is pretty boring, but as you can see from what I already shared, it works if you give it some time. With that in mind, let's zoom out and see what these changes mean for our projected annual dividend income going forward. We started 2025 with a projected annual dividend income of $2,673.57. By the end of August, that number had grown to $3,931.72, and now, as of the close of September, we've officially crossed that 4K mark, sitting at a projected annual dividend income of $4,053.20, which boils down to $337.77 per month, or $11.10 every single day in 100% passive income. Two things I want to point out here. First, that amount does not include any interest gained across our accounts for the next rolling 12 months. And second, for anyone that's been paying attention to these videos recently, you know I'm far from concentrating on increasing these numbers these days, and in some cases, it's almost like I'm trying to do my best to lower it. My focus for all of 2025 has been consistent. Focus 100% on growing our money by concentrating solely on the total return and doing my best to outperform the market. With that being said, a nice side effect of this investing style is all these holdings just keep sending me all this money in the form of dividends, so why don't we check out what came in this month? Because of the amount of ETFs our portfolios hold, September was a very busy month. In total, we received 16 dividend payments and 5 interest payments on idle cash across all accounts. 4 of those dividends and 1 interest payment came from the Anyone Can Invest portfolio that I began from the ground up to track right here on the channel. Because I already post 2 videos just on that portfolio per month, I won't be diving into those in this video, but you can click on that little link on the screen to watch the most recent one if you want. Now I'm going to try to do my best to go over the rest of the payments as quickly as possible, beginning with the date, then the stock or ticker, the amount paid, and the total that holding has paid me all time in that particular account. September 2nd, we had Visa for $30.94 in my taxable account, bringing that total to $162.60 from this holding all time. September 11th, we had Microsoft for $32.75, also in my taxable account, bringing that total to $195.47 all time. September 24th, we had SPYG for $15.96 in my Roth IRA, bringing that total to $179.81 all time. September 26th, we had VNQ and QQQM in my Roth for $78.90 and $14.97, bringing their totals to $687.30 and $154.81 respectively all time. September 29th, SEHD in both my Roth and the wife's for $81.81 and $167.69, bringing those totals to $662.78 and $1,228.31 respectively all time. Finally, follow along on this one. On September 30th, UPRO, TQQQ, and VMCIX paid us $16.49, $27.10, $11.58, $6.16, and $163.24, bringing their totals in their respective accounts to $55.98, $165.38, $66.32, $75.48, and $1,638.47. As promised in last month's recap, this month was a very busy one. Since I doubt any of you were sitting there with a calculator keeping track of the totals, let's go ahead and see how much we made for all of September, compare it to last September, and close out quarter 3. In total, September brought in $717.92 across all accounts. That's actually 39.1% higher when compared to September of 2024, which is a pleasant surprise because of all the changes made to the portfolio, hopefully for the better, since the start of 2025. Speaking of that, looking down one more cell, you can see that our total for Q3 came in at $1,170.51, which is in fact 11.8% lower than Q3 of last year, which backs up my statement and is closer to what I expected for those changes. Looking at 2025 as a whole, in the first 75% of the year, we now sit with $2,975.97 in passive income across all accounts, with 3 months left to see just how close we can get to that 2024 record total. Speaking of this year's and previous year's totals, I sometimes like to see how far we've come in our dividend career by looking at this chart right here. This chart will show you each and every penny the wife and I have earned in passive income since we accidentally received our first dividend in my 401k back in 2017. Down at the bottom, you can see that across all accounts, we've earned a total of $13,467.50 in career dividends and more than 125 shares completely for free via the drip. The beauty about the drip is that all those free shares act like normal shares and still generate us money in the form of both capital appreciation and, you guessed it, future dividends. Those are 2 key factors in what is known as the compounding effect, or as we like to call it in the dividend space, the dividend snowball. With that segue being laid, let me go ahead and show you just how I track the dividend snowball here on the channel and share its newest update. For this month, we crossed the $13,000 mark, meaning we do have an update to share from my buy 1000s chart, so let's look at that one first. As I briefly explained, this chart tracks the dividend snowball, and simply put, how long it took me to reach each $1,000 milestone, with the goal that they happen faster and faster as time passes. This month, you can see that it took me from June 30th to September 29th to make the latest $1,000, or go from $12,000 to $13,000 in career dividends. While 91 days to make $1,000 seems like a lot, it's a heck of a lot faster than the first 1,000, which took me 1,617 days to make, so we are clearly picking up speed and heading in the right direction. My goal each time I make an update to this chart is simply to lower the average number of days between these milestones. Last month, that was sitting at 242.9 days, and here you can see we now sit at 231.2 days. I also have another chart right here that shows the milestones spread a little bit further apart, but since the next milestone is for $15,000, we don't have an update to share in this episode. Now, naturally, since we've been sharing all the good news about the portfolio, some of you might be wondering exactly how much of our money is in what holdings. So let me share our overall diversification right here. On the left side of the screen, you'll see a pivot table combining all of the holdings from both the wife and I's accounts, giving us one consolidated view of the full portfolio. To keep things simple, I've grouped similar holdings together. Instead of listing every ticker, they're labeled by category: S&P 500, SCHD, mid-cap ETFs, leveraged funds, and so on. This makes it easy to see where all the money is going without getting lost in the details. Each row shows the group name, the amount invested, and its percentage of our total portfolio. And at the bottom, you'll notice the grand total of all invested capital: $314,131.62. A new milestone as we continue to climb up Wealth Mountain. Over on the right, the pie chart visualizes this allocation. Here's how it breaks down now. 40% in the S&P 500 or tracking funds, 15% in mid-cap ETFs, 7% in SCHD, 7% in leveraged funds like TQQQ and UPRO, 5% in my highest conviction dividend growers like Costco, Fix, Microsoft, and Visa, and the remaining 18 positions make up 11.37% of the portfolio combined. Again, that total amount invested is different than the amount I spoke about earlier because this is only based on invested capital, not market value. As I said before, and we'll keep saying, we cannot control what the market does on a day-to-day basis, but we can always control what we put into the market. So this is the number that matters most to me. Now that we've seen where the money is allocated, the big question is, how's it performing? Next up, we'll compare this portfolio to the major indexes, both short and long term, to see how our approach is delivering. In September, we had 2 accounts outperform all 3 indexes by wide margins. 1 account outperformed just the Dow, and 2 accounts underperformed all 3 indexes. Unfortunately, at the time of recording, T. Rowe Price has still yet to update the information for the wife's 401k, so we can only guess what that did with the September numbers added in. Checking out the year-to-date numbers, it looks like only 1 account is currently outpacing all 3 indexes, but the good news is it's doing so by a wide margin. The rest of the accounts are having nice 2025 so far, with the smallest gain being up 10.21%, but nonetheless, the goal over the long term is market outperformance, so I'm looking for better reports going forward. It's going to be challenging for me right now to just let my plan ride for a little bit and not move stuff around just based on these numbers, so I'd love your guys' help to do so. If you wouldn't mind, that'd be awesome. With all of that in mind, let's go ahead and close out this video by shifting gears and checking out what dividends are headed our way next month in October. Looking ahead to October, things are going to cool down a little bit, but don't you worry, there will still be plenty to talk about. I'm showing 7 different dividend payments coming for October, and keep in mind that 2 of them are from VOO, and that accounts for about 40% of the portfolio as a whole, so those are bound to be juicy. Between those dividend payments and the interest payments we get monthly, I cannot wait to see how we kick off Q4, and believe it or not, head down to the closing stretch of 2025. Will we make it 6 months in a row of up and to the right, or will we be spending spooky season buying the dip? Come back next month and find out. As I said earlier in the video, I'd love to hear about your September down in the comments. Tell me all about your wins, lessons learned, or passive income gained so I can cheer you on. And in this episode, I made several references to my Anyone Can Invest portfolio. If you're new here and have no idea what that is, I'll link the playlist right here on the screen so you can go check that out. But until next time, see ya.